All right, guys. So we're going to look at a couple stocks. We're going to look at an index as well. So the very first thing that I like to do before analyzing a stock is just to determine what trend I'm in. Now, I personally only like to trade Fortune 100 or Fortune 500 stocks and also IPO stocks. So IPO means initial public offering. That simply means a company becoming public so that the public could start investing in that company and trading stocks. That's all that is. So when a company is public, typically it starts off very cheap. And that's why I like to look for newly public stocks or companies that have stocks and shares that the public can invest in. All right. So that's number one. But first off, we're going to look at Apple. It's a very established company organization. And I want to see what trend I'm in overall. That will let me know what direction I'm going to trade. Very rarely do I sell stocks, and there's a few reasons why, but I won't get too much into that today. But Apple, what I like to do is go to the higher time frame. In this case, because Apple is well established, I can just simply go to the weekly time frame. And if I'm brand new to stocks or brand new to trading anything, I'm going to go to the higher time frame and just simply scroll back. And this will tell me overall on the weekly time frame, I'm in an uptrend. So if I have a 50-50 chance when I hit the buy button or the sell button, and I have a 50-50 chance, I'm a brand new trader, I have no clue what I'm doing. I close my eyes and hit the buy or sell button. There's a 50-50 chance price is going to go my way, but I don't like 50-50. To me, that's a losing streak, right? So I want to increase my odds from 50-50 to maybe 70-30. A 70-30 simply means that I can reduce my risk by trading with the trend. And because Apple is a Fortune 100 company and it's very, very established, and I can keep scrolling back, I'm all the way back in 2007. Look at this trend as it continues to climb. The more it gets established, the steeper it climbs. And you can see as in 2020, there was a huge dip, but that's when it started to climb even steeper than it has in the past, right? So you're going to have your pullbacks, you have your downtrends on your daily time frame, but overall on the weekly time frame, we're continue to climb. So as an investor, I am an investor when it comes to stocks. I day trade stocks as well, but overall, to me, in my past, in my history, and the way I trade stocks, I get the most bang for my buck when I'm holding stocks from a discounted level. So now that I've established that I'm in an uptrend on Apple, remember, I just went to the weekly time frame because there's a lot of history in Apple. So I don't need to go to the daily. I can go to the weekly, establish that I'm in an uptrend. Next thing I want to do is number two, spot my levels. Now that I know that I want to buy and I'm going to increase my odds from 50-50 of just randomly hitting a buy or sell button to 70-30, I know that I'm going to buy and that's going to decrease my risk, right? Because the trend overall is a buy. Now, I'm talking from an investor standpoint, maybe of a swing trader, a position trader. We'll talk a little bit about intraday trading in a moment. But now that I've identified my uptrend, now I'm going to start scrolling in. I'm still on the weekly time frame, and I'm going to identify major levels. I'm not looking for minor levels. Minor levels is when I start to uh, draw myself down in my time frame. Now I'm looking for minor levels for entry. So my major levels on my weekly is right here. Here's my support level here. Obvious because we see when price reach this area, it drastically drop. And when I say drastically drop, simply measuring, that was a 15.30 drop, about 15 and a half drop from the price of $197 to about $167. That's pretty significant. Again, came at this level in the past. That was December 2023, drastically dropped. Same right here, pause, and then there was a gap here. So there's a reason why price pushed up because we're in an uptrend. The reason why we have this drop here is because this is significant. Came back here, drop again, significant. But since we're in an overall uptrend, eventually is going to break. So that's that 50-50 chance turning to 70-30 because we would have invested at this double bottom right here. We would have invested here, right? So if we had no clue, when we're going to buy. We could have sold here, but remember, if we're reducing risk, I wouldn't have sold. I would have waited for price to come back down at this support level for a buy. I would have exited here, maybe some positions. We have something called fractional share sizing, similar to fractional lot sizing. For those who are in the Forex Academy, fractional share sizing, just a overview of what that is you're going to purchase a number of shares, and what you do is break it up as price starts to go your way. And I like to pay myself. So for example, if I get in right here, and let's say I buy 20 shares of Apple, I'm going to ride it up, hoping that it gets to this resistance level. As it gets to this resistance level, I may pay myself 15 of those shares and only hold 5. Because I know since I'm in an uptrend, eventually it's going to break. But there's a possibility since we're at a resistance level, it could come back down. So I would hold 5, hoping that it does break. And if it does break, I'm going to still hold that 5 until I find the new resistance level. And remember, I don't know that this is a resistance level yet because there's no price action telling me in the past that this was ever a level. I just know that I'm in an uptrend and I'm reducing my risk significantly. So as I'm holding these 5 shares, I find that there is resistance here. As price pulls back, now I'm waiting for a retest here. This is where I'm waiting for a retest. At this point, it didn't get a retest, so I'm still holding my 5 shares. It gets a new high. I discover that this is a resistance level, still holding my 5 shares. Remember, I paid myself 15 of those shares down here by selling it, or AKA exiting those positions. As price gets to this new high, now I'm still looking for this retest here, right here, or a retest here. These are both significant levels. So as it comes to retest here, I may consider entering more shares. All right. As it comes here, I'm entering even more shares. The same concept as we do in the Forex Academy, but you have to mark your levels correctly simply by price action. Price action works with Forex, with indices, with ETFs, trading futures, with stocks, the exact same thing, except you are now trading stocks, which typically rise in nature, specifically Fortune 100 stocks. With currencies, just give you an overview. With currencies, you're going to reach a cap, you're going to reach a peak, and then it's going to reverse and drop drastically to a downtrend. Then you're going to reach a bottom. Then it's going to rise drastically, a peak and bottom. That's all you see with Forex typically. Because currency needs to balance itself, the entire world uses currency, and it has to balance itself to stay competitive with the other currency for travel, for trade, and so many other things that we do around the world with different currencies. So it's going to hit a peak, it's going to hit a bottom. Just like the Wyckoff effect, some of you guys are familiar with that. You're going to have a uptrend, you're going to have a consolidation, then a downtrend, then consolidation, uptrend, consolidation, so on and so forth. With Fortune 100 stocks, all you do is have uptrends, consolidation, uptrends, consolidation, uptrends, consolidation. And if you do see a downtrend, all that is consolidation on the higher time frame. When you're on the weekly time frame, on the daily time frame, for example, if I go, let's go back. So if I were looking at this area right here and I scroll out and I make it big, this looks just like a downtrend. You'll say, nope, it's a downtrend on the Apple has a downtrend. And that's why I like to look at the weekly for established stocks like Apple, because this isn't a downtrend. This is simply consolidation on the weekly time frame, right? So let me get back to my area. So that's all that is consolidation on the downtrend. The only time you'll see a significant downtrend where it breaks uptrend structure is when there's major news like COVID or something like that. Even when there's something going on with the US, it's going to be a brief downtrend, which is more of a consolidation on the higher time frame than anything. But overall, no, nothing's going to happen with Apple. Apple is established, and I don't think it's going anywhere anytime soon. So that's why I personally like to only mess around with Fortune 100 stocks and then IPO stocks, newly public traded stocks that seems promising, like Kava or Reddit and so on and so forth that I posted in this Discord. All right, so now that I've found my levels, previous resistance is going to equal future support. And sorry for the markings and everything. Hopefully it's not too confusing, but I'll clear that up when I can. But we've established resistance here. Now it's future support. And I haven't deleted this line at all. Even though price is hanging out up here, I'm still keeping this line here because I know there's a possibility that price, although it's up here, can come back down to here. That's how significant this level is. So this level is still here until it starts making higher highs and higher lows and break this resistance. So I'm keeping this level in the back of my mind right now. I don't think it'll get back here anytime soon, but I'm still keeping this level because remember, price broke out here and then it came back to retest this level here. So there's still a possibility it can happen. So whenever you have questions about levels and if it's going to be retested, just simply look at the past. All right, so now that I've established my uptrend on the weekly, I established my major levels on the weekly. I'm going to go down to the daily time frame, and now I'm only focused on this area here, this consolidation area. Now I can zoom my chart in and blow it up just a bit and only focus here. I'm not worried about down here quite yet, although it's in the back of my mind. I'm just worried here. We're looking here. All right. So remember, only buying. And if you do sell, it will be briefly. But you also have to know that risk plays a factor. Okay. So you may notice these two arrows here because we're in a consolidation zone. We have a channel here, a sideways channel. Price can get to this area here and shoot down, or it can come back down to our support and shoot up. These two areas is where I would mark my alerts. This resistance area here, the support area right here. That would be my alerts. I'm not putting in limit orders because I want to see what will happen. Remember, I'm more in favor of breaking to the upside, looking at the history of Apple since whenever it went IPO, there's more upside movement, which reduces my 50-50 chance to that 70-30. So I'm eventually going to break here. Eventually, I rather buy here at support, get it wrong, and price comes down to my major support level here and hold it, than to sell up here and then price breaks up higher. Because if I sold here, let's say, for example, if I sold here, but price breaks up higher, because remember, I have now a 70% chance that price is going to break higher. But if I sold and price break higher, there's a steep chance that price will not get any lower than this resistance level right here. Now future support. There is a high probability chance that price will never come back. So the best you can do is break even minus paying your spreads, commissions, and things like that, depending on the broker you have. Does that make sense? Just kind of give me a temperature check. Does that make sense? Why I would rather sell or I would rather buy and price drops than sell and price goes up. Because now the risk is against me, given the fact that we're in an uptrend for years and decades. Does that make sense? Okay, awesome. Okay, so I'm going to put a level here. We'll keep an eye out on this. I'm going to also keep an eye out on this with our Newly Stock Academy as well. I'm going to drop this, but in our public Discord for stocks, we're going to keep an eye out on. I'm going to put a alert, and you see me adding the alert right now. I'm just going to put Apple. I'm just going to put resistance level. So I'm not going to even really put a sell, but I want to be alerted when price is at the resistance level so I can keep an eye out on it. Now I'm going to put another level here at support. Apple, and then I'm going to put possible buy. So you see how my language is a bit different than at the resistance level because I want to buy, but I do want to know when it's at resistance level just in case so I can keep an eye out on it if it's going to make higher highs and higher lows. My favorite strategy for Fortune 100 stocks, when it finally breaks up, because I typically only buy, is the common break and retest, because this almost always happens. Break, retest. This is where I would buy. Now, there's a possibility it can come back and retest here. Absolutely. However, the odds of it doing that is slightly slimmer than it break, retest, and then come back higher. So that's why I would rather buy here than sell here, because it may not even come down lower and it may just come back to my retest area and I may zero my balance out. All right. So as traders, AKA, I like to say traders are entrepreneurs. As traders, also known as entrepreneurs, we want to establish our risk. We want to know what's our risk, just like any entrepreneur. What is our risk getting into a business deal? If you had any company, what is our risk? Okay, now that I understand my risk, how can I diminish that risk a bit more? How can I make that risk a little bit more or less riskier? And by doing that, I only like to buy. Okay. Now you can sell and you can get profit. However, to me, it's a bit more riskier. All right. If you have a margin account for stocks, you cannot sell unless you have a specific amount in your account. If you have a cash account, you can sell, but you also have to know the risk with that. It's a 1-to-1 ratio when you have a cash account. So if you have $1,000 and you select cash account from your broker, then you can only spend that $1,000 minus fees from your broker, right? You can't, there's no, there is no leverage. It's just the 1-to-1 leverage. So for every $1 you spend is the $1 buying power that you have. When you have a margin account from your broker, you do have leverage, and that leverage is dependent on what you select with your broker. And because you have a margin account, there's rules that your broker will establish and say, hey, you cannot sell unless you have X amount of money in your account, because you're pretty much borrowing from the broker. And if you're borrowing money from your broker because of that leverage, they have rules to establish to have established with you. And that's something that they can do. All right. So that's why I only like to buy, because it's riskier to sell. And guess what? If you were to sell, or let me tell you something like this. Here's another risk factor. If you were to buy Apple right here at this resistance, the worst thing you can do is that price can go all the way down to zero, which that will never happen anytime soon with Apple, all the way down to zero, and you will lose your entire investment. So if you had $1,000 and you bought at this resistance and something happened with Apple and it went all the way down to zero, you will lose $1,000 plus spread and commission. All right. If you sold and price continued to go up, look how far price can go up as I scroll. Does that make sense? Look how far a price can go up. And it can continue to go up and continue to go up. The furthest down price can get to is zero. You can't get any lower than zero. So that's why there's another risk factor, that if price happens to plummet to zero, you lose just the money you had in your broker account if you bought and it went against you. But if you sell and it goes against you, you can lose all your money plus go into the negative if you weren't careful and exited. Does that make sense? Just type a yes or no. If not, then I'll kind of explain it. Remember, as traders and entrepreneurs, we establish risk first. We know that we're the away team, and I say this all the time. The markets are the home team. So we only want to trade the way they trade and manage the risk as best as possible. All right. That's Apple, guys. Let's take a look at Coinbase. How many of you guys are familiar with Coinbase? Just drop a yes in the chat. As traders, most of you guys should be familiar with Coinbase. Coinbase, who isn't familiar with Coinbase? I'll just wait for you guys to answer. Who's not familiar with Coinbase? Tanisha, are you saying you're not familiar with Coinbase? Or are you saying that you are? So for those who are not familiar with Coinbase, I'll just wait for you to respond. For those who are not familiar with the Coinbase, Coinbase is pretty much a popular cryptocurrency exchange platform. And that's where users can buy, they can sell, and store digital assets, like, for example, Bitcoin or Ethereum and other cryptocurrencies. And it was founded back in 2012. So this is very popular here, Coinbase. And this is the company that will be trading. So remember, start from the higher time frame, depending on how far they've been in business. So if I go to the weekly time frame, remember Apple, I just kept scrolling left, 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 and it was established. Coinbase went IPO in 2012, I believe, or actually it was founded in 2012, but it didn't become a public traded company until 2021, right? So this is when it first went IPO in 2021, and it was trading around like 300 and something dollars, which is crazy. This is the peak here when it first went IPO. This is something I wouldn't have bought because it's too expensive. When I buy a company and it's IPO, I want to see like $22, $30, anywhere within that range, maybe no more than $50 depending on what it is. Starting at 300 anything dollars, I wouldn't have even invested in that. All right, so this is where when IPO, so no need to really go to the weekly time frame, in my opinion, now that I've established that, because the reason why I'm going on the weekly time frame is I want to establish the trend, very first thing. And when I go back and try to establish a trend, I see the peak here from when it went IPO, and then a huge drop right after that, right? And as I scroll over, I identify a bottom. Let me get my tool here. I identify this bottom here. So something like that. And then it starts to establish an uptrend again. So I'm like, okay, well, there's no dominant trend. However, price is somewhere at the, I would say, 75% area from the previous open, the peak. So that doesn't really serve me too much, except now that I look in the past when it first opened, maybe I can draw a resistance level up here and do something like that. Okay, so now that I've established that, and I know that we're in an uptrend, but it's not a dominant, strong uptrend, now I want to look for levels. Okay, so since I haven't found a dominant uptrend, I want to look for levels where it's been tested multiple times and it's rejected. Um, and this is what happened. This was back in March, where price came and rejected off of this area here. This is the weekly time frame. So week after week, it came to retest this area multiple times. So this to me was established. Dropped, came here, pulled back, same thing here. And now we're here this week or last week, came right back at this level. And then guess what? It gapped to the upside. And we want to know why it gapped. So I'm going to go to the daily time frame and figure out what happened. Here's this gap right here. Let's close this up. So here's the gap on the daily time frame. Okay, we see an earnings report here that wasn't too good. It fell and dropped. This is the red color here, meaning that the earnings didn't do too good. And you can see that drop from that day to here, a pretty significant drop. It came, recovered, shot through this level here. And this gap is important because it started to respect this resistance level right here. But something happened where it gapped to the upside. And if we look back on the 8th and November 12th, we can possibly find out what happened. But that's neither here nor there. Now we can see a retest, and that's where price is currently at now. So those who are on, is this something that you would buy now that price is at this retest level? Looking in the past, this was a significant level that I've marked, March of 2024, July of 2024, and now here we are current. Let me know if you would buy. And if you would buy, why? And why not sell? And those who would sell, let me know if you would sell, just out of curiosity. And I'll wait for you guys to respond. The reason why I'm wanting you guys to respond is just to, I think once people are active and speaking, it kind of helps them to remember things and be engaged and recall things when you see similar setups in the future when you guys decide to trade these. If you're not trading these already. All right, so Ronnie said buy because of retest. Julie said buy because it's a retest. Awesome. So you guys said that. Anyone opposed to buying and would sell, or if would anyone just wait and see? And then I will let you know what I would do. I will wait. Tanisha said I will wait. Okay. So would you wait to see if it will break further or break higher, or just because you're not 100% sure, Tanisha? D said, I personally sell. Okay, that's a different from most. Why would you sell, Deej, out of curiosity? And again, no one is wrong. I just want to know the why behind the what. I want to know the why behind your reasoning. Why would you sell? I know why would you buy, Julie and Ronnie? Tanisha, you said you'll wait. Uh, Salmat, if I'm pronouncing that right, it says, I wouldn't sell because crypto is definitely on a bull run and it has retested already. Okay. So now you're kind of thinking about uh, fundamentals. So what's going on with an asset? We know that Coinbase is highly linked to cryptocurrency, just giving you that brief introduction. So you understand that. And then you also said a retest. So that's good analysis. DG said, I wait to see if it's a possible sell because each time it reaches that level, it drops. Okay, that's a legitimate concern. All right. So what I would personally do is one, remember, we went back on the weekly time frame and I seen the high when it first opened back in April of 2021. This is that high. This is when it went IPO. November of 2021, this was a high here before it drastically dropped. Okay. Now we're here, right here. We had a peak. Something happened where buyers stepped in heavily. And then now we start to see as we go to the daily, this drop right here. So I, for those who say that they wouldn't do anything, they'll wait. I think that's really good. One, because you want to know first, I think you should know what's going on with Coinbase. So we always want to know what's going on with an asset or a company before we do anything. For those who use TradingView, I like to see this. Do you see this here, these letters and these little icons here at the bottom of my screen where my cursor is? This E right here, and then this little icon right here. Can you guys see that? This E right here means earnings report. This is when they had an earnings report. This is like high impact news for a company. The symbol here is information. So when I click it, notice that this information symbol is right aligning right where price is right here. So I would say, what is this? Before I go into that, in order to get the earnings report on your trading view and this little information icon, simply click anywhere, right click on your trading view platform, and you're going to go to settings, and then you're going to click on where it says earnings. Click that so you can see all the earnings. So when I unclick it, you can notice how the E's disappear. When I click earnings, the E's come back. So you know when the earnings is happening, and I can click earnings, I can see what happened with the company. If they done well, if they didn't, their revenue, I can even go into it further and start looking at their charts, but that's not about that today. And then I would click key facts today. This right here, click that. That tells you what's happening today for a company. So when I unclick it, notice how this purple icon disappeared. When I click it, it comes back. So earnings, key facts today, and dividends is what I normally have clicked. When I click this key facts today, this is really important for a stock trader. And I like TradingView because it provides me with all of this. I don't have to go to Coinbase website, see what's going on, find their earnings report, which is hard sometimes to find. Have to scroll all the way down on their website, go to investors, then find their earnings, then scroll and nope, all I have to do is go to TradingView, click the earnings report, click more financials right here, and it gives me a nice, beautiful, clean, colorful graph of their earnings, their overview, their statements, their statistics, their dividends, earnings, all that stuff. And it's all right here. So I'm not going to teach you how to read it right now, but just want to kind of show you that. So when I click this information symbol here, it says key facts today. This is like high impact news. Okay. For Forex trader, this is high impact news. It says Coinbase Global Inc., also known as Coin, that's their ticker symbol, saw a 10% drop in stock price following a 20% rise on Monday. This marked its best 7-day performance ever, with an overall increase of 81% during that time. Coinbase Global Inc. saw its shares gained 4.3% as the price of Bitcoin surged past 90,000. So Silmat was correct. Knowing some history, knowing some high impact news, knowing what's going on with the company plays a huge role. All right, Coinbase has launched the Coin 50 Index designed to track the top 50 digital assets, including Bitcoin, Ethereum, Dogecoin, and Solana. So little things like that is important. Now, what I would do is buy here. So you would say, Brian, well, why would you buy here? One, because remember, I like the break and retest strategy. Eventually, it's going to break. When it comes to retest, now it's attracting buyers off of this level. This is where I would buy at. That's one reason. The second reason I would buy is because of that news right here. I know that crypto is doing well. Coinbase is starting to do well. Oftentimes, when a price or a stock before it climbs, it has to pull back and attract buyers. And that's exactly what's going on. And I wouldn't know that unless I read this news here. So this key fact today is important, and it's telling me that buyers may start to step in because of what's going on with Coinbase Global. And it just so happened to be on discount right here. Here is the discount. This was expensive, price wasn't on discount. Now it's on sale right here. And the reason why this is on sale and is going to attract buyers is looking back in the past and looking back in the past. So I would buy here. However, I wouldn't buy too long. I would probably buy back to this resistance level here. And maybe do the fractional share sizing and see if it will eventually get to this level here, this previous high where it went IPO. But I wouldn't hold it much because there's no dominant trend like that Fortune 100 company like Apple. So my strategy changes a bit because of the asset and the company that I'm trading. Does that make sense, guys? Temperature check. Temperature check, temperature check. Are you guys with me? Some of you guys aren't really talking, which is fine, but I just want to make sure you're not asleep. I want to make sure I'm not boring you guys. Ronnie, you said it makes a lot of sense. Michelle, you say yes. Um, is it Salmat? Is that your name or is it just kind of a Discord name? I don't want to butcher your name, so I'm just asking. Did I pronounce it right? Is it Salmat or Silmat? Which one? First one is Salmat, second one is Silmat. You can just put one or two. Sylvie. Okay. Awesome. I may forget it eventually, but that's a little easier. I'll just call you Sylvie for today. Makes sense. Nayla, you said it makes sense. Awesome. Okay. All right. Next one we're going to look at is Nas 100. Who's familiar with Nas 100? If you're familiar with Nas 100, just give me a brief description of what it is while I pull up my chart. Who's familiar with Nas and what is it? And don't be embarrassed if you don't understand it or don't know, or if you want to guess. This is a safe environment, and then we're here to learn. Ronnie said top 100 stocks. Who agree? Fractional share sizing. So Fractional share sizing. We talk about fractional lot sizing in our Forex Academy, Sylvie. Fractional share sizing simply means that I have a certain balance in my broker account. Let's just say $1,000 in my broker account. And I don't want to risk my entire $1,000. So I'm going to find out what is 2% of my $1,000. Okay. And I will take that 2% and break it up. Okay. So 2% of $1,000 is $20. So I know I have $1,000 in my account, but I don't want to risk no more than $20. So that way, if price goes against me, I still have enough money to continue to trade. I'm not risking, I'm just not getting in blindly. So now that I have $20 to play with, I'm going to enter some shares, buy some shares. I may buy a share for $5, another share for $5. And then if price goes against me, I may add another $5. So I still have an extra $5 to play with. As price moves in my direction, eventually, I can start holding it. And then once it gets to resistance level, I can pay myself whatever I want while holding at least one share of that $5. So I'm not going to go too deep into it because that's kind of like the seasoning of our Forex Academy. But that's all that is. It's just breaking up your account balance, determining how much you're wanting to risk. And then once you determine how much you're wanting to risk, for example, 2%, I'm going to break up that 2% and enter trades based on that. And as price pulls against me, and then I'm going to usually enter a little bit more. And I'm only entering more because I'm confident price is going to eventually go my way. Like I showed you in Apple, I'm only going to buy because I'm confident that it's easier to buy in an uptrend than selling in an uptrend. It's definitely part of risk management. That's one strategy that we teach in our academy, in our risk management strategy is that, amongst a few other. All right, top 100 companies. All right, Nas 100, top 100 companies. Remember, Fortune 100 companies, Fortune 500 companies are companies that I like to invest in and only buy. Nas is a reflection of those companies. All right, the top 100 companies in the United States. And as I scroll out, go to the weekly time frame. This is the strategy I like to do. Scroll out and just go back. Uptrend, 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 uptrend. That's all I like. That's all I want to see. Uptrend, uptrend, uptrend. We see this huge decline right here. So that kind of broke our uptrend, but eventually it continues on uptrend and go higher, right? So that's all I want to see. This drop was in November 2021. So definitely things went on with US and a lot of companies. But overall, uptrend, uptrend, uptrend. Now that I've established an uptrend, I want to find my key levels. That's number two. I found my key levels. I'm not going to go too far into why these are levels. You can always go back to my Apple example. These are considered key levels here, and you can eventually be able to spot it with your eye. Okay. So these are key levels within this area here. Now that I established key levels, I'm not really worried about these key levels here because that's far away. I'm not too worried about this level here because that's kind of far away. I'm more worried about this level here, this support and resistance level here, because that's where price is at. Now that I know that, I'm going to my daily time frame, scrolling down. Again, not worried about this here unless price gets here. I'm only worried here. Okay. I marked these levels. I'm not worried about this area. Now I'm only worried about this resistance level here. And this support level right here. All right. Now I know that price broke this resistance. And those who've been trading NAS with me since the rate cut in September, I've been in just a long-term buy, paying myself, exiting, then entering more every single pullback. Entering more every pullback, paying myself every resistance level. That's all I do with Fortune 500 companies and indices like this. So now we have this break while I'm still holding on some shares. And now we can see a retest is coming. It can retest to this area here, very significant. It can also retest to this area right here. That's also significant. This is at the bottom of my head, back of my head. But I'm still holding on some shares and I paid myself at the top once I seen price pullback. So one thing I need to know, number three, educate yourself on what you're trading. Since I know that NAS 100 is the top 100 company, and oftentimes traders, just from experience, they will just trade something because other people are trading it and have no clue what NAS 100 is. So when you understand an asset, you will trade it and look at it differently. I know this is the top 100 company in the world. I don't just look at it as NAS 100. I look at it as top 100 tech companies. And as price come and pull back, I'm still in hoping for a buy. I want that retest right here. I personally would enter a few shares right here. Not a lot, but a few based on how much I'm risking from my account balance that I talked to Sylvia about. Okay. I'm entering more because I know it could still come down here. I'm just entering more. And if price happens to break here and come down further, then I'm going to start adding a little bit more of my fractional share sizing strategy. That's when I'll enter my dominant amount here. And you can enter the same amount if you want, a fraction if you want, but this is where I'm counting on profiting here. So I will be in the negative, but as price starts to pull up from this dominant level, I will be positive from this area here, holding most of my shares at this bottom until it gets up here. Then I will be break even at this area right here, but I would be overall positive because of this long impulse move here. And I will be break even here minus fees. So I would enter at this level here, looking for this flag pattern, this bullish flag pattern to head down and shoot up. One, because I know that the rate cuts from September helped, and rate cuts simply means that buyers are interested in borrowing more. What companies are people going to be borrowing more? They're going to be borrowing for homes, for cars, for technology, and we just happen to be in the season of borrowing. So this is just knowledge that I'm taking with me when I'm entering these companies. All right. Typically in the borrowing season, stocks go up, but you want to wait for a discount. This is my discount right here. I would buy and hoping price to come up. All right. As price come back up to this minor resistance level, here's a minor resistance level because it peaked right here. I'm going to pay myself, not all of it, but I'm going to pay some of it by selling some of my shares because it could come back down and retest and come back like this and consolidate. Or it can break. If it breaks, I still paid myself, but I'm still holding on some shares. That's the concept. All right. So do you prefer to just only buy stocks in general or just during an uptrend? I like to buy stocks in general in an uptrend and in an uptrend. And me personally, only like to buy Fortune 100 and Fortune 500 stocks, so big stocks, and indices. So for example, NAS 100, if you want to trade NAS 100 at a discount, you go to QQQ. This is an ETF. QQQ is an ETF of the NAS 100. And you can see how much it's worth, right? And you can trade many, kind of like mini lots or a fraction of it. This is QQQ is the exact same markup as NAS 100. And I won't go too much into it, but an ETF follows the NAS 100. So if I go between here, let's go to NAS again. Look at the setup. A splitting image here. Here's NAS, QQQ. NAS, QQQ is the exact same thing. Okay. Even TQQQ. You see it in my area here. This is the ETF, the exact same thing. QQQ, TQQQ. TQQQ is a fraction of QQQ. It's trading at $80 a share, in other words. Okay. So you can trade NAS 100 at a discount trading the ETF. Or you can even trade NAS 100 like a mini NAS too. So I'm not going too much into that. That's all in, if you guys decide to get into the academy or invest in academy, we get into all of that there. But this is more of just showing you how to mark up your charts. Okay. Um, and then there's an adverse ETF, which is SQQQ, and I don't have it. Oh, yes, I do. SQQQ. This is the exact same as NOS 100, but the opposite, the exact same. So, and the same as TQQQ. So SQQQ is the opposite. So if I go between these charts here, you can see this uptrend. I go to SQQQ, downtrend. So this is safe. So whenever you see, this is how you would want to do it. If you're trading NAS or you're following NAS 100 and you see a deep sell, remember, I don't like selling NAS because it rises in nature. However, instead of selling NAS, you can just go to SQQQ and buy SQQQ because it does the exact opposite as NAS 100. Does that make sense? So if NAS 100 right here, if it happens to drop, and let's say it was dropping and did this, hurry up and go to SQQ because it's going to do this and you're going to buy. This is good for someone who has a margin account but don't have the funds, enough money to sell because their broker won't allow them to. Or if they have a cash account and they don't want to sell because it's riskier, they only want to buy because they have a cash account, they have that one-on-one leverage, you will want to go to SQQ and buy when NAS 100 is selling. My throat is kind of getting red now. So I'm going to let you guys speak if you guys had any questions, and then we'll mark up. I had two more, but we'll mark up one more. I don't want the recording to be too long, so I may have to edit it. Um, Always, Ova, you said makes sense. Awesome. Does it not make sense for someone here? Because I want to make sure that you guys, it makes sense. So for those who are taking notes, I would take note of SQQQ. So these are ETFs. So you're going to take a note of SQQQ. And ETFs, for those who are unfamiliar, ETFs is a basket of stocks all in one. So if I'm trading EQQQ, I'm trading NAS 100, the top 100 companies, the basket, but at a fraction. Does that make sense? And ETF stands for Exchange Traded Fund. So it's just a basket of a whole bunch. Just like an index is a basket of stocks, ETFs are the same thing. All right, let's take a look at one more. I'm going to shout out two of them and let me know whoever says I'm going to look at Tesla or Amazon. Which one do you guys prefer? And the majority wins. Tesla or Amazon? Both of them are Fortune 100 companies. Tesla, 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 Tesla. Okay. Looks like Tesla is going to win. Yep. Okay. So let's look at Tesla. All right. Here is Tesla. So those who aren't familiar with gaps, notice these gaps here in between the candles. We call these gap up or gap down. And usually we have gap ups or gap downs due to news from overnight news, pre-market or aftermarket. So just a brief education here without going too deep. Gaps here, here's a gap right here. This is the market close. So the market closed right here. The market closes at 4. And then the next morning, pre-market or right when the market opened, it opened right here. So this candle is red because it went down, it shot down and then closed. And then as soon as the market opened the very next day or the weekend, depending on when, it started here and then it shot up and closed here. All right. So usually because of news. And if we look at it, here's that E I told you about, the earnings. You see that it's green? That means Tesla had a positive earnings report. If I click on it, It tells us their earnings was green. Surprise, it was at a 21.334% um, uh, positive number. So it rose 21.3%. And then you can click where it says more Tesla financials and go more into detail here. This was in October 23rd this year. And a green earnings made this pop all the way up here. So if you had purchased the night before and you woke up and you would have woke up into that huge profit right here. All right, so that's considered a gap. I didn't want to go too much into it. If you want to close these gaps and it looks confusing, you can go to your candles chart here, and then you can select Heikin-Ashi candles right here, and it will kind of close it for you if it's easier on your eyes. Heikin-Ashi candles. Okay. So that being said, I'm going to keep the Heikin-Ashi candles just for visual aid. Remember, Fortune 100 company, I'm going on a weekly time frame. I'm going to follow the trend. So overall, an uptrend, but I can see it capped and peaked right up here back in October 2021. This was the cap. This was the peak right here. I'm keeping that in the back of my mind. Highly important. I'm going to fast forward. Price is nowhere up here. This is where price is at, so I don't have to worry about this now, but that may encourage me to buy. That being said, now I'm going to find major levels. Here's my level. Let's act like this wasn't here. I'm going to find candles where price reversed abruptly. Really quickly. One, shot down. Two, shot down. Didn't quite make it. Three, shot down. Didn't quite make it. But this is still a nice area. If you want, you can widen your area here just to include this area and just say this is all level. It's completely up to you. All right. So that being said, price shot up. So one or two things. Remember, I'm a fan of a break and retest. So if price comes back and retest, I'm definitely buying because look how great this price has shot to the upside. Pretty significant. So if it came down here 98 times, I'm just kind of making up a round number just to show you how confident I am. 98 times out of 100, if it came here, it will head to the upside. That's how confident I am because it's attracted buyers and remember on the weekly time frame, so attracted buyers pretty significantly. This will be a huge drop here if that happened. The reason why it rose so much is because of the election this week and last week is because of the election. So the hype will eventually slow down. Eventually it will come back down. If it happens to drop from this level, it's attracting buyers from when it originally shot up. So this level would be excellent. So if I'm giving you numbers, anywhere between $283 and the lowest around $265 is where I would buy and apply the fractional share size method, if that makes sense. All right, so that level here, now I'm going to go down to the daily time frame. Now I'm going to find out what's exactly happening. A lot of you guys are familiar with my teaching. I always say I don't look at candles as just candles. I look at candles with people with money. These candles are people with money to me. So as I see price starting to drop, I'm showing people who have made a lot of money right here at the top. They felt like they got a good deal and now they're releasing their money. They're letting it go, giving it to people who are looking to buy. And eventually, hopefully it comes down to this area here where I'm interested in buying. If it never comes down here, then I just missed the trade. I'm fine with that. There's a lot of stocks I can invest in, a lot of currency I can, in indices and ETFs I can invest in. I just missed the trade. I don't cry over spilled milk because there's a lot of opportunity out there. All I would do is mark up my chart for another opportunity. So I'm only interested in buying Tesla now, and I'm only interested in buying here. And you have to be firm within your strategy. If you don't have a strategy, you have to develop and know a strategy and have a written plan on paper or on your computer. And mine's clearly say on paper, if there is a break, I need a retest. That's a discount. I look at this as people with money. That's my strategy. Yours may be different, where you may say, I'm in an uptrend. Some people do this. I'm in an uptrend. I see a pullback. There's a flag pattern right here. Here's a flag pattern. I can trap it as a channel. If it comes back to my trend line and do something like this, it comes back to my trend line, I'm buying right here. To me, the problem with that is there's no price action here when I look left. There's no dominant price action at this area right here. Maybe something like this here, but to me, I need a further discount. If I'm fractional share sizing, I need a better deal. And that's just me. I'm all about managing risk, and that's something I would have. Because the people who are moving the markets, they don't know where your trend line is. Your trend line can be completely different. The only thing that they know that's also on your chart is this level right here, where this price. Price is important to the people who move markets. People who put millions and billions of dollars, they look at this price, $270, beautiful price to buy. Look left, $270, beautiful price to buy. 200 and about $80, beautiful price to buy. So that's why I say anywhere between this area is a beautiful area to buy. Just like when you go to the grocery store, you look at the price oftentimes before you buy it, unless you really want it. But you look at the price before you buy. You're not looking at trend lines and looking at bread and pulling up a chart and saying, hey, let me draw my trend line to see where people may buy. No, you're looking at price. And whenever price did well in the past, more than likely it's going to do well in the future. So when you start looking at candles as people with money, your perspective of trading completely changes. And that's how mine did. All right. So guys, those who are watching the recording, let me know if you have questions. God bless you. I'm going to end the recording now.